Problem 7A-4. This is a good summary problem. We will complete a payroll register, calculate the employer payroll taxes, and then do our journal transactions. So it says you gather the following data from these time cards in individual employee earning records. We've got data for these 4 employees here. So we've got their marital status, their cumulative earnings before this payroll, biweekly salary, so they're all salaried here, check number, and then department. And we need those department numbers here that they work in for the information for our journal entries coming up here. So we know whose wages go against which department's budget. So let's see what else we have here. We have some assumptions. We have the Social Security at 6.2% at that 142,800 wage base limit, and then Medicare is at 1.45% on all earnings. We also have federal income tax. It's calculated using biweekly payroll withholding chart included back here. And state income tax will be 10% of the gross pay. Charitable contributions are $11 biweekly. The SUTA rate is 5%. FUTA rate is 0.6% on earnings up to $7,000. Note that the $7,000 wage base applies to both SUTA and FUTA. And then back here we have our biweekly payroll percentage method withholding chart. So that's for the federal income tax there, otherwise known as FIT. Close out of that for now. And then we've got our required tasks. So let's go ahead and move on here. So for task 1, on December 5th, 2020 something, prepare a payroll register for this biweekly payroll. If an input field is not used in the table, leave the field empty. Do not enter 0. Very important there. Abbreviations used are YTD for year to date, FIT for federal income tax, SIT, SIT, state income tax. Round all amounts to the nearest cent as needed. So we'll go ahead and reopen that first table here, the view the employee earnings record data, to start us off here. So we can use, to get the prior year earnings year to date right here, cumulative earnings before this payroll, so we can go ahead and copy and paste that in for these employees. We'll have copy and paste on this one, keeps it simple. 47,500 for Gus. And for Mayo we have 141,300 and 162,200 for Caleb, Sam's. And then we can go ahead and total that up for a total of 357,400. And then we can move on here to filling in the salaries. Here, 1,560, 2,000, 2070, and poor Sam's is at 800. Then we can go ahead and total those up for a total of 6,430. And because these folks are salaried, all of them, all 4 here, none of them will be getting overtime, so we'll leave those blank. And then we can go ahead and fill in gross earnings here. And because there's no overtime for salaried employees, our gross will be the same as the regular here. So we can go ahead and copy paste again. And same total, 6,430. And then we have current earnings year to date, which will be the prior year earnings year to date plus our gross here. So we'll go ahead and add those through. for a total of $363,830. I've gone ahead and moved the employee earnings table up a bit so we can see that next we need taxable earnings for FUTA, SUTA, and Social Security. And just a quick reminder, this is the taxable earnings, not the actual deduction. The deductions go over down below after this table. So how much of the gross pay is going to be taxable for FUTA and SUTA? First of all, we need to remember what is the wage base for FUTA and SUTA. If you've forgotten the assumptions, it reminds you that the wage base is $7,000 right here. So then we have to go ahead and look and see if any of these employees have made more than $7,000 prior to this paycheck, because then $0 will be taxable. Just having a quick look here, it looks like Ekin here has not quite made $7,000, so part of his wages will be taxable for SUTA. But then if we look at the rest of these three employees, they have made well over $7,000 prior to this period. So let's see. So how much does it take to get to $7,000 here for Aiken? It would be $600. So we'll take $600 here for SUTA and FUTA. And then the rest of that $960 over the $7,000 is not taxable for either of those. But we can go ahead and leave the rest of these guys blank for FUTA and SUTA, for Gus, Mayo, and Sam's, because again, they were past that limit already of $7,000 prior to this pay period. So $600 will be the total here at the very bottom for the taxable earnings for FUTA and SUTA. And now we have taxable earnings for Social Security. So if you forgot the wage base, it's back up in the assumptions, but it is $142,800. So let's take a look at each employee's prior plus current salary. So under current earnings year to date, to see if any of them have crossed that threshold. So the first two prior year to date earnings here do not cross that, $142,800. So the full amount of their pay will be taxable earnings here. So we'll put $1,560 and $2,000. And if we take a look at Mayo here, $141,300 hasn't crossed yet, but here we can see they have crossed $142,800. So we have a little bit of math here to do. So we're going to pull up our calculator. We're going to have $142,800, and we're going to subtract out $141,300, the prior earnings year to date, to see how much it would take to cross that threshold, which will be $1,500 out of this gross pay. So we can go ahead and enter that here under Social Security. And then when we take a look at Sam's here, Sam's has crossed that Social Security wage base limit prior to this pay period, so none of his pay will be taxable for Social Security. So we can leave that blank. And then we'll go ahead and add these guys up here for total taxable earnings for Social Security. And that will equal $5,060. We can go ahead and check our answer. Well done, but we are not done yet. We'll move on to the next portion of the problem here in just a second. So now we have the fun task of calculating our deductions here. So the first one here is Social Security. So as we can remember, that is 6.2% of the first $142,800 in wages. So we have that taxable amount here out of each of the employees' checks, because again, one of them here, Mayo, has crossed that threshold here after this paycheck. So the full amount for Ekin here, $1,560 for his wage, that is taxable by 6.2% for $96.72. And populate that in there. Clear it out, and then next we have Gus for $2,000. and we can multiply that by the 6.2% for $124. And then moving on, for Mayo, we have $1,500 out of his gross pay is taxable for Social Security. So we can go ahead and multiply that by 6.2% for $93 even. And Sam's is 0, but again, we do not type in zeros in this problem, as mentioned in the green writing. So we can go ahead and add those through. And for time's sake, I'm going to type that in. And then we can move on to the Medicare deduction here. So we can go ahead and scroll back up. So we have $1,560 here for Aiken, and remember Medicare does not have a wage-based limit, so the total wage for each of these folks will be taxable for Medicare. So we can go ahead and multiply that by the 1.45 rate, and that's 1.45%. So it's $22.62 for Aiken. And then we can go ahead and clear that out. And then the next one for Gus is $2,000 times that 1.45% rate for $29 even. And then we can clear that out. And Mayo, we have $20.70 times 1.5% for $30.02. We're going to round that one up. And then for Sam's, he has $800. And multiply that by 1.45% for $11.60. And then we can go ahead and total those up here at the bottom for $93.24. And now for our federal income tax deduction. So we're going to go and pop open this biweekly payroll withholding chart here, and we can take a look at Aiken. So his gross wages here are $1,560, and that falls under that third row on that withholding chart. So we'll go ahead and type that in here, $1,560. And we need to subtract out $865 for $695, and then it's 12% of that number for $83.40 plus $38.20. And go ahead and make sure to clear out your calculator and then add those numbers together if you are using the percentage key. Otherwise, it will mess with your answer. So $121.60 for the federal income tax here for Aiken. We can enter that through. And then we can go ahead and clear that out. And we can see with Gus here, he'll be under that third row as well in the federal income tax table. So we can go ahead and do the same here. 2,000 minus 865 equals 1,135. And then 12% of that number for 136.20. Remember that number, 136.20, because we are going to add 38.20 to that number for 174.40. And then Mayo here is a little bit tricky because it does fall into the next row on that withholding chart. So there will be that fourth row. The adjusted wage amount is at least $2,041, but less than $3,805. So for that row, we'll clear this out. So $20.70 for his gross pay there, but we have to subtract out $2,041 and then multiply that by 22% this time. So $6.38, remember that number, we'll clear that out. So $6.38 plus $179.32 equals $185.70. And then Sam's is also different than our first two here because he earns 800 and that pay falls in the second row of the withholding chart here. So let's go ahead and type in 800 for that gross pay for Sam's. And then we'll subtract out 483 and multiply that number by 10%. And this one, we add 0, so 3170 will be the federal income tax here for Sam's. And we can go ahead and scroll down and add those through. And that's going to be a total of $513.40 for the federal income tax deduction for all the employees. And then we're going to move on to the state income tax deduction here. So the SIT deduction, that was 10% up here in the assumptions. If you have forgotten, there's no wage-based limit on that one. So let's go ahead and clear out the calculator if we haven't already done so. So for Aiken here, 1560 times 10% for 156. And you can take off just a decimal for each of these, or you can actually do the calculation in the calculator. For a total of $643. And then charitable contributions are $11 for each person here. So we can go ahead and input 11. Nice and easy. $44 total. And then we can get the net pay here by taking the gross wages up here and subtracting out Social Security, Medicare, federal income tax, state income tax. So go ahead and do that here. So 1,152.06 for Aiken, and then we have 1,461.60 for Gus. Mayo gets 1,543.28. Sands gets 665.70. And then that is a total net pay for everybody of $4,822.64. And then here for the distribution of expense, we can go ahead and open the view the employer earnings records data, and we can see Aiken, here's production, so that 1560 will belong there for that gross pay. And then for office, for Gus, 2000. Mayo will be production for 2070. 800 under office for Sam's. And then we'll total those up. So 3,630 here, 2,800 here for office. And then we can go and see how we did here. Excellent. So task 2 is to calculate the employer taxes of FICA Social Security, FICA Medicare, FUTA, and SUTA. Round your answers to the nearest cent. So we can go ahead and close out this table here. So for FICA Social Security, it'll be this total here, $313.72, and I can scroll up a tiny bit here so you can see that that is the deduction there. And for the Medicare deduction, move this 93.24 right here. We do need to do one more calculation here for FUTA and SUTA, because remember those are not FIT and SIT, completely separate thing here. And remember for that FUTA and SUTA, the taxable earnings are up here, so that's $600. And then under the assumptions, open that up, SUTA rate is 5% of that 600, FUTA rate is 0.6% of that 600. So we can go ahead and close that out and do the calculation. So 600 multiplied by 5% for $30, and that was for that SUTA. So that was the rate with the 5%. And then for the FUTA, that was the 0.6% on that 600. So we can go ahead and multiply 600 by 0.6% for $3.60. And then we can go ahead and enter that in. And then for the total there, that'll be $440.56. And we can go ahead and check our answer, see how we did. Well done. Okay, and here we have task number 3. Journalize the payroll register and employer's tax liability. Record debits first, then credits. Exclude explanations from your journal entries. Enter amounts to the nearest cent. Begin by journalizing the payroll register. Here we have the date, December 5th. Count titles, debit, and credit. So let's start with our debit account. So that will be an expense. And that would generally be the total gross wages of $6,430, but notice that they do say distribution of expense right here. So they split it by department. So we can start with the production salaries expense of $3,630. So our first account will be that production salaries expense, $3,630. And then next we have our office salaries. So that's $2,800 even. Office salaries expense for $2,800 even. And then we're going to go ahead and have our credits here. So we have federal income tax payable. State income tax payable. We have our Social Security, FICA Social Security payable, Medicare, FICA Medicare payable, and charitable contributions payable. These are all the deductions that we did above here, so we'll go ahead and populate them in just a second. And salaries payable here at the bottom. Then we'll go ahead and input those from above. $513.40, $643 for the state income tax, $313.72 for the Social Security, $93.24 for the Medicare, $44 for the charitable contributions for everybody, and then salaries payable will be the balance left over there. And that you can see all up here. And let's check our answer to see how we did. Nice work. All right, final stretch, everybody. Now journalize the employer's tax liability. So we'll start with our debit account, which will be payroll tax expense. Payroll tax expense for $440.56. Then we've got the FICA Social Security tax payable, FICA Medicare, FUTA, these are all payable accounts, and SUTA payable. We're bringing in the answers from above. And let's go ahead and check our answer. Fantastic. Now remember, there is a third journal entry, and for some reason the authors did not make you do it. But the third one is super simple. You just take the salaries payable. Well, you actually do it when you pay the employee. So you take the salaries payable, and you have to make it go zero. So you would debit salaries payable, and then cash or cash payroll would be the credit. But that's it for this problem.